Welcome you with us here in business today, and we're tracking, of course, all the market action for you as we head into opening trade. And the setup, of course, this entire week we've been waiting to move ahead to new highs, but have been lagging behind on the back of the kind of action that we've been seeing on the currency. Waiting for the RBI commentary. That is going to be the big news today. Markets will be watching out for that. So all eyes are really going to be on what comes out of the RBI commentary in terms of an outlook on rate cards, an outlook on the currency, and so forth. So that's really what we're tracking this morning. In terms of the Sensex and Nifty itself, looking a little weak on open as we've pretty much seen throughout the week. But let's see where we end up, particularly after what we hear from the RBI, in case there is some kind of sentiment boost that comes in from there. Let me also welcome in Shell, who's joining us as always. Shell, good morning. How's the technical setup looking to you?
Well, a very good morning to you, Aabha. Thank God it's Friday, and thank God there are two major events, which essentially means we'll just chill throughout the day. So, RBI governor speaks at around 10 a.m. So before that, markets will be absolutely flat. And then, of course, as you rightly say, the life of rupee starts beyond 90. So the commentary from RBI will be very, very critical in setting the tone for the Nifty for the next week. And more importantly, Russian President Vladimir Putin is in town. Therefore, defense stocks in particular, BDL will be in top action. So that is something that I'm looking at. A quiet day for indices, but action on the long side on stocks like BDL, stocks like Siemens, IPCA, stocks like Minda Corp, a lot of movement happening on auto ancillaries, and of course IT firing all guns. So we'll keep an eye out on those. And on the weak side, KNS Technologies, Aabha Enterprises are the ones that are sleeping a bit. So a quiet day, Friday, and lots of macro events for the bulls and bears to rest. Aabha.
Quiet overnights as well. Wall Street was quiet. Asia also was subdued. In fact, losing off certain gains that had come in the last couple of sessions. Japan, of course, continues to be weak. So no major triggers coming in on that front. Everyone just eyeing direction from some of the tech stocks largely, but no other key triggers when it comes to global markets either. Overnight trade was largely mixed and continued to trend more or less quiet or weak for the meanwhile. So that's on global markets. Let's also take a look at some of the stocks in news this morning and see what's catching our eye. Indigo, of course, has been in the news on the back of all of those delays, due to new norms, etc. Let's take a look at how the stock is doing, down about 2%. Interestingly, Shell, we have a buy call coming in on Indigo despite all of this chaos. Citi has put a buy with a target price of 6,500, saying that, of course, these operations will be cleaned up and was unexpected and so on and so forth. And recalibration will take place in the next couple of hours. But we know all of this, but the fact is that there are still rising cost headwinds, and the entire industry, of course, is reeling from that, and capacity remains tight. So the brokerages are saying because of the capacity issues, Indigo still stands to gain. Airfares will rise, demand trends are improving. But on the other hand, if Indigo is going to have such issues where it can't keep up with the rising demand, and some of the new norms will affect its cost efficiency as well, because they actually have a system where they rely on increased frequency of flying of their pilots. So the new norms are going to have to slow that down. Wouldn't there possibly be some impact on an Indigo?
Aabha, I'm fairly clear that this is a stock that needs to be a part of your long-term portfolio, but the rally has already been phenomenal, and this is an event where a lot of people would want to book profit and catch hold of the stock on at a lower ground. It's already broken its 200-day moving average, and if you look at how even the 1-year return has been, it's 23%, and this is after the stock has corrected about 10 odd percent. It's amongst the NSE 500's top 5 stock in terms of year to date return. So all said and done, everything is phenomenal for Indigo. This is an opportunity to get it at lower levels, and for those who have a longer term view of the market, yes, it's an integral part of your long term portfolio, but you just might get it a little cheaper over the next 15 days. Abha.
Okay, that's interesting. So you see opportunity to buy perhaps. Um, Overall, FY 27-28 EPS estimates have been cut by 20% each. This is again, I'm just reading out the
Yes.
brokerage report coming in. This is on Morgan Stanley, and stock is currently trading at 9x compared to its pre-COVID median of 8.5x. However, Q3 FY 26 is expected to see yield growth, and Q4 yields may decline due to a higher base effect. So that's the some of the outlook coming in on an Indigo, which continues to get buy calls, including from our very own Shell. All right. Yes, Shell, you were going to make a point.
Abha, I'd just like to add one line on Indigo. If you look at the 5-year, if you look at the current PE, it's about 41. And if you look at the 5-year average PE, it's about 24. So the
Okay.
gap is so huge, that gap needs to narrow. And this is, this is how, events get triggered on their own and the price is correct to meet long-term averages. Indigo has been a phenomenal outperformer over the last 2 years or so, based on market share, based on great service. But, somebody needs to book profit and convert, notional profit into physical profit by transferring it to the bank. That is what is happening. And in 1 or 2 months, this will be settled, but you will get the stock cheaper over the next week or so. Aabha.
Okay, so that's on Indigo this morning. Let's take a look at what else is in the news. We continue to get buy calls in on a Reliance. We've been talking about defense. Cement has been slow to pick up. It's been all about auto and metals this week. Where should we turn our focus, Shell, just as we count down to open? Still about 8-9 minutes to go.
Abha, I would focus on two sets of stocks. Auto ancillaries are looking very, very good. Look at Motherson Sumi. Look at the Minda twins, Uno Minda and Minda Corp. And I'll also look at the Lumax twins, Lumax Tech and Lumax Industries. So these 5 stocks from the auto ancillary space are doing phenomenally well. I'll also pay a lot of attention to the infrastructural sector, in particular Siemens. There is a long-term change that is happening on the charts. They look very good. And of course, metals is something, Aabha, that you and I have tracked with great detail. Mark my words, Hind Copper and National Aluminium. All of this, ladies and gentlemen, are very good on technical charts, but you need to consult an independent financial advisor before you go in the whole hog. In any case, staggered buying and of course a thought that will come in from your independently attached financial advisor. Hindalco, my apologies, Hind Copper, Nalco, Siemens and IPCA from the pharma space, Aabha. These are 4 stocks to look at for the short term on technical charts, and for the long term, Hind Copper and Nalco for your portfolio.
Okay, interesting basket of stocks to keep an eye on there for you. We've also waiting for Mayuresh Joshi to join us, so we'll get his view as well and how things are looking this week as we count down to the RBI meet. That's the big trigger that we are tracking for you. Let me also take a look at some of the other brokerage news coming in. Telecom in particular, let's pull that up. HSBC has saying that Jio has widened its subscriber lead in the home broadband segment. Their additions, in fact, remain the highest in October, followed by Airtel. Vodafone Idea continues to witness a subscriber decline, so they're not very bullish on Vodafone. Bharti Airtel, they're maintaining a buy call, target price of 2,350, and Reliance, they're maintaining a buy call as well. So that's the view coming in when it comes to telecom. Meanwhile, if we take a look at what they're saying on cement, JP Morgan in particular on cement, they're saying that, as we all know, some of those large caps have been underperforming, and key concerns, of course, include growing supply, subdued demand, lack of cement price momentum, and their expectations are kind of reasonable going forward, but they're waiting to see if there's any kind of price hike that's going to come in year end, positive feedback that could drive the stocks higher going forward. So Ultratech, Dalmia Bharat, Shree Cement are the ones that they're keeping an eye on. They're saying that industry utilization levels are also likely to fall due to rising supply. So this is interesting for other reasons as well, Shell. for a macro front, we are seeing a slowdown when it comes to any kind of indications on capex from the industry. We've had a whole host of conversations, whether it be with the FICCI chair and so on, and industry stakeholders in terms of what's happening there. But we're not yet seeing that fillip. So I'm not sure if it's going to be all guns blazing by the time we hit March.
Absolutely, Aabha. I think cement for the last 3 years has been an ignored sector, and for the very right reasons by the market. Two large players are mopping up small players. So you have to be either in the universe of Ultratech or the multiverse of Ambuja Cement. These are two large leaders who are now consolidating the entire market. Now they are inducing fresh capacity into the market too, which essentially means prices will be capped. But I'll request the PCR to fire the chart of India Cement. Look at how the stock ran up yesterday. It was up 9.7%, about to make a fresh high. And yesterday's rally came after a 10-12 day downtick. So this is a stock that you might need to look at for the medium to long term. But otherwise, cement, Aabha, it's not making much money. It's a commodity. 6 रुपए kilo hai. No margin, no branding, nothing.
All right, interesting to see some of those cement majors fall completely out of fashion there. Okay, let's take a look at some of the other stocks that we could be possibly eyeing today in trade. Some of the other newsmakers, defense, as Shell mentioned earlier as well, will continue to be in focus on the back of Putin's visit. We're still waiting for some kind of finality in terms of what's really going to come out of that. We've seen, of course, in terms of other names or stocks in the news, we've seen a lot of those rail counters talk about order wins this week. Something like RailTel has in fact seen something pretty much a couple of days consecutively. So PSUs, I think, across the board, whether it's defense, whether it's rail, shipping, will continue to see some amount of limelight just in terms of what's really building up over there. PSB banks, of course, this week we didn't see too much on the back of the clarification with regards to FDI norms. So that's on the other side, even though perhaps on some of them some opportunity to buy still. We've got, other than that, some of the names from the broader markets that one could keep an eye on in terms of news-based traction as well. But on the index, it's been pretty much quiet. Mayuresh Joshi is also now joining us. Let me see if he's with us now. There he is. Mayuresh, good morning. Just counting down to open, of course. It's Friday. It's RBI meet today. What are you tracking?
Morning, Aabha. Thank God it's Friday in the first place because nothing's happening in the markets really. So
It's true. It's true. Exactly.
no, so I think RBI policy will be key in today's session, specifically in terms of the governor's comments in terms of the rupee depreciation and his outlook, obviously, in terms of how he looks at growth dynamics. But I think his commentary on the rupee depreciation and the actions thereof are going to be extremely critical.
Mayuresh, good morning. A very warm welcome to you. What I suggest is, because there's nothing happening in the market, each day we start this show thinking ki kuch acha hoga. Every day we just close it because market is sideways. I suggest you take a flight to Delhi, right? Aabha and I will host you for a very nice dinner in Delhi. The food here is amazing.
Right.
And of course, there's a bit of pollution, but we'll take care of it by providing with some medicine. And we might as well discuss some good stuff over the weekend. Markets, nothing is happening.
Absolutely true, sir. More than welcome to come.
So, Mayuresh, when we're looking at the RBI meet, what are you hoping to hear?
No, so I think there is some element of hope that a rate cut might come through, but even if it doesn't come through, I think the markets probably have taken that in its stride. The two elements, as I said, one on the exchange front, what is the RBI stance thereof, and second, in terms of both the liquidity angle that the RBI has already provided, what kind of support mechanisms does RBI seek to support growth that is needed across industries and sectors as far as the economy is concerned.
Mayuresh, We're counting down to budget now. I mean, I'm already getting a little ahead of us here. I know we're still tracking year end, but it's not long to go. It's literally just a couple of months, and then we'll have a year ending and the next quarter. But do you think we could see any kind of major progress in these couple of months in terms of a build up or run up to the budget on the back of hopes? Are we expecting the reform buzz to continue? Because last year I remember it was a decent budget with more the tax flip, of course, but the government had very little room to maneuver, and I think that's been the case now for the last couple of years. So, do you even anticipate some kind of a run up, perhaps in some of the smaller industries ahead of the budget?
So, I think, frankly speaking, I think the expectation largely is that it will be a tightrope as far as the budget is concerned, and therefore, I think to manage the fiscal balances in a scenario where I think growth dynamics, specifically in lieu of tariff impositions, looks a little patchy as we speak. Obviously, I think the tailwind here will be if there is a tariff resolution that comes through over the next couple of weeks, few months, that completely changes the dynamics in terms of the hit expected on the GDP. However, I think as the status quo stands and as we head into the budget, I think it will be a balanced act as far as the government balance sheet is concerned. And therefore, I think expecting a little bit too much in terms of exponential capex spend by the government, I think that probably seems to be a little bit on the lower side as far as probabilities are concerned. But the trend will continue. I think the overall structural trend in terms of government capex will continue. The adherence to fiscal discipline will continue, and that probably will help us having better sovereign ratings compared to the rest of the emerging markets. And as earnings start coming back, which is again going to be the most important point that the markets will track, which seems to be the case. I think at some point of time, I think the kind of underperformance tag that India probably has, the kind of outflows that we've probably seen, might start changing for the better. So not expecting fireworks from the budget, honestly, but if any resolutions comes through from the US tariff front, along with earnings recovery, I think that gives the impetus that the markets are probably looking.
Okay. The test of 26,000 happened in the morning, ladies and gentlemen. The markets are now open. It's a very quiet day, and rightly so. 10 a.m. you have the statement coming in from the RBI governor on the credit policy, and of course, the top man globally, President Vladimir Putin of Russia, is in town. So the markets are holding their breath, and this is Friday. So lots of things to show you that it's going to be a very staid day. But in terms of activity, you need to look at M&M Finance, fresh record high, 354, 2% higher. Strong move coming into Aditya Birla Real Estate. This is what we earlier used to call Century Textiles, 1818, 2.3% higher. But in terms of activity, it's absolutely flat as flat can be. Advanced decline is 1:1. 845 stocks in the green versus 758 in the red. IT stocks are doing pretty well, and that's because of the rupee, and realty PSU banks showing some traction, but 26,000 should hold. Aabha.
All right, so looking steady on the index this morning. IT, of course, has been majorly in focus this week on the back of the currency fluctuations, but we did see about a month ago IT making a comeback as well, Mayuresh. So let's take a look at some of those majors, whether it be the frontline ones, whether it be some of the mid-cap IT names. Coforge was having a phenomenal run this week, for instance. Where would you find magic in the IT pack?
So clearly, I think mid-cap IT is something that has probably stood out compared to the large-cap names. The expectations in terms of the pricing environment, the expectations in terms of stable EBIT stroke EBITDA performance going forward, the order wins, and therefore I think constant currency growth. I think all these elements probably seem to be in place for mid-cap IT companies. I think large-cap IT companies largely have lagged. And though the valuations are now tad bit more favorable for large cap IT, I think what we are expecting in terms of Q3, Q4, Q3 largely impacted by furloughs, Christmas holidays, lesser revenue days. Q4 is when discretionary clad budgets will start getting firmed up. For large cap IT companies, I think the multi-million billion dollar orders how they shape up, at what pricing do they shape up, how do industries get impacted by the tariff impositions. I think all these elements will be at play. While mid-cap IT companies might be relatively better off looking at commentaries that have come through. So though even valuations are a tad bit expensive for mid-cap IT companies, the expectation largely is that the performance might continue, and therefore the momentum might probably stay with a few of these mid-cap IT stocks. A few stocks which probably have given a very stable management commentary and expectations of a stable revenue growth are companies like Coforge, Persistent, Emphasis, and they might have the momentum continuing in their favor compared to large caps.
9:20. The first 5 minutes have lapsed. The markets are in green. 26,050 is where the Nifty is. This is a very, very positive development if you look at from the point of view of an intraday move. Bank Nifty providing its support, but just very, very modest gains. 100 points on the Bank Nifty, 82 points on the IT index. Markets are just about waiting with bated breath what to do. Indigo is the top traded counter, 0.34% lower, nothing to be concerned about. This is how it is. HDFC Bank is slipping. KNS Technology, something that I had mentioned to Aabha, slipping 3.4% on very, very heavy volumes. This is something that you need to look at. And of course, strength coming into the pharma space. The market is now moving towards defense. So look at Eris Life Sciences, 1.2% higher, 1578. And what else would I like to mark? Aabha likes the internet space. So for her and her alone, PB Fintech, this is the stock on the insurance space, doing pretty well in a flat market. Policy Bazaar, 1% higher, 1873. Aabha.
Grow is also up 3% today, so that's the other one looking good from the new age plays. Then we are seeing some good volume in ITC post BAT, who's looking to sell 7% of equity for nearly 3,000 crores. So let's pull up ITC for you. And Lloyd's Engineering is tied up with Italy-based firm for radar tech. The stock's up about 7%. So that's what's standing out from the broader markets. We've also seen, of course, traction in the Meesho IPO. That's seen pretty steady action this week. We've seen, from the new age plays, a 197, Nykaa, all of them pretty much deliver this time around. Mayuresh, which is your pick from the new age plays?
So TBO Tech is something that we like. I think it operates a very lean model as far as the hospitality industry is concerned. And therefore, I think with almost 12,000 transacting agents operating across markets, a large chunk of that coming through in terms of its European revenues, followed by the Middle East, then India, and then skewed across Latin America, USA, and Southeast Asia. I think TBO Tech offers a platform both for B2C as well B2B. So the enterprise customers is something that form a majority, but I think even the B2C customers are a decent size as far as the overall numbers are concerned. And therefore, I think revenue growth, the margin performance, and expectations of optimization of costs because of their online presence and digital offerings, I think that is something that probably stands out in terms of ratings and rankings as far as platform companies are concerned. So TBO Tech is something that we continue.
Also got, just talking about these Eternals, also up over 1%. Yeah. Go ahead, Shell.
Yeah, okay. So in terms of 52-week lows, I'd like to mark some favorite stocks that are, somewhere there. Thermax, little worrisome, 28.48, the lowest in the last 12 months. Bata India going nowhere for years together, 9.58, another fresh low. Parfin Corporation, Aabha, this is something that we had discussed with another market participant yesterday, and I'll request Mayuresh to kindly offer his views. 350 rupees, fresh 52-week low, 5% dividend yield, trading below book, a government Navratna company with a huge track record of both sales and profit. Mayuresh, what is PFC telling you at this 52-week low?
No, so I think where the concern is emanating for the stock price has been the recent performance and exposure to a large part of government projects where the payment schedule probably has lagged a tad bit. And therefore, I think execution and working capital is something that has probably bothered the street. But again, over a longer period of time, Shell, I think what the expectation of government capex basically stands out is 500 gigawatts is what we're looking at in terms of renewable capacity is expected to get added over the next 8 to 10 years. A large part of their exposure is towards government entities where the risk of default is negligible or almost nil because everything is probably sovereign backed. Now, there will be periodicities of time, a few quarters, where all these elements will probably take place. But over a longer period of time, the risk in terms of defaults probably go away. Secondly, I think in terms of the entire restructuring of their own balance sheet, specifically post-COVID, I think has happened in a significant manner. And therefore, I think they're very well positioned in terms of ensuring that they have these advances and the advances growth itself with appropriate asset liability management on their balance sheet. Third, as you rightly pointed out, I think very, very strong dividend yield to probably back it up. And therefore, there are these intermittent short-term concerns. But over a long term, looking at all these tailwinds that can probably play out, my own sense is that it can be a structural dark horse, a structural story, and a dark horse that can be played. Obviously, I think you need to have patience. You can't expect wonders to happen.
MCX is also up about 1%. So you've got Grow Up, we've got MCX up. Let's take a look at some of the other capital market stocks and see if they're all buzzing. This morning, MCX is looking good at this point of time. Steady trajectory there. And then remember this morning we were also talking about telecom and that report that had come in from the brokerage report that had come in earlier this morning. Let's just pull that up for you as well. HSBC. I mean, it's actually not a sort of negative report, but somehow all stocks are down this morning. They did talk about Jio widening its lead. They talked about overall subscription numbers, maintained a buy call on Bharti, but we're seeing a bit of a drum down on telecom this morning. Any views here, Mayuresh?
So I think if you break down the sector, Aabha, I think leave aside Jio and Bharti Airtel, I think Vodafone Idea has very limited circles to work out with, and BSNL probably operates out of rural areas where its reach is very, very restricted in terms of subscriber additions. Now, if you build this up in terms of subscriber market share and revenue market share, which are the two key parameters for the industry as a whole, subscriber additions have been reasonable for both Jio and Airtel. The revenue market share has also gone higher with the ARPU increases that we have probably seen. And this is not the end of ARPU increases. You're obviously going to see more ARPU or price hikes that probably happen, which increases the ARPU over the next few months, next few quarters. And therefore, in terms of the capex spends that both the companies, Jio and Airtel, have probably done, when it comes to 5G, when it comes to spectrum auctions as well, and the repayment of that. The improved cash flows with ARPU increases will obviously aid debt repayment. In case of Jio, I think it's almost negligible, but in that of Airtel as well, I think that will definitely aid balance sheet deleveraging as well as expectations of its overseas operations doing well. And therefore, if you put a combination of all these factors put together, I think as a space, it will continue doing well. Obviously, I think in terms of where they stand at this juncture, it is penciling in over the next 2 years, the best of numbers to probably come, as most analysts have pegged in. And therefore, expecting a huge re-rating from these levels probably seems improbable. But they will be a market performer because there are very few plays as far as telecom is concerned. And ARPU increases will happen whether we like it or not.
9:29, ladies and gentlemen. The first 15 minutes of the market will shortly be over, as we've been pointing out. Completely flat, but what's really positive is that 26,000 on the Nifty has been held. I don't know for so long, but so far the market is looking positively to RBI's commentary, especially on the rupee. See, we've already seen 90, so usse bura aur kya ho sakta hai? So the rupee might appreciate from 90 to 89.5 or somewhere, depending upon what the RBI says. But beyond that, there is just nothing happening. Bit movements happening in Shipping Corporation of India, 2.3% higher. Zentic is moving on order flow, 2.2% higher on this drone maker. Nothing much. Railtel, we've been pointing out some odd bits happening on the railway space, but metals are looking good. And I'll request Mayuresh to speak on Hind Copper. This is a breakout that's happened on a quality stock from the metal space, driven by very strong tailwinds. Let's hear him out on what the possibilities of Hind Copper exist in the medium term. Mayuresh.
So copper prices at an all-time high obviously aids in copper quite significantly. Second, I think resolutions in terms of their smelting plant and operations is something that will also aid revenue visibility as we head into the in the next few years. And obviously, I think expectations in terms of demand and end user application, as we all know, remain extremely, extremely strong. The fourth element in terms of demand supply dynamics, global copper mines as an example, and the extraction and mining thereof over the next few years against the potential demand that will probably come through. I think that probably seems to be well balanced, or rather in shortage as we speak at this point of time, which is obviously hiking and spiking prices of copper as we speak. And therefore, as a commodity play, I think if all these dynamics keep on playing out, I think the stock will keep on continuing doing well.
Okay, Kesoram Industries, let's pull that one up for you. 13% higher today. Frontier Warehousing has launched an open offer to buy 26% stake in Kesoram Industries, aggregating a total consideration of 44.2 crore rupees. It's a small stock, 17% higher there today though. That's the news that's driving that counter. Okay, from the broader markets, Mayuresh, are you even looking there right now? Or are you waiting for things to kind of stabilize or show some direction on the index?
No, so we are very, very selective. So as a disclaimer, we do like a stock like Vishal Mega Mart as an example. I think numbers have been good. The expectations in terms of discretionary spending coming back seems to be a base case scenario. It obviously operates out of tier 3, tier 4 towns, where our take is, and what we've seen historically with GST rationalization also aiding in terms of the growth dynamics of growth coming back very, very strongly, reflecting in better volumes as far as their apparel business is concerned, which is priced very, very attractively for those micro markets, as well as FMCG and the other businesses as well. And therefore, margins should hold up and improve going forward as well. With improved volumes, the top line growth should be relatively better, aiding leverage onto the balance sheet. So we are very, very selective, but our own sense is that Vishal Mega Mart is something, in our opinion, where earnings can hold up and the stock can.
All right. Great. Thanks so much for joining us, Mayuresh, and sharing some of your picks with us as well.
Thank you so much.
Kunal Parar joining us now, VP Technical Research, Choice Equity Broking. Kunal, good morning. Let's first get a take on the index from you. How is it looking?
Broader perspective, then Nifty has a strong support at 26,000 and 25,800. In the last two trading sessions, we have seen some kind of bounce back, but now that's a question mark whether this bounce back will sustain or not, because we have been witnessing some selling pressure and weakness in the USD INR, and indirectly that will make more pressure on the Nifty. So overall, if we talk about the overall perspective, then if Nifty breaks 25,800, then further downside would be there up to the level of 25,500, and on a higher side, Nifty has a strong resistance at 26,300.
Nine 34, ladies and gentlemen. We are waiting for the RBI governor to begin his speech. But for the moment, there is mild positivity across the board. Let me just mark some volume buzzers. A lot of move coming into ITC hotels in terms of volumes. About 39 lakh 65,000 shares have been traded in the first 20 minutes of trade. This is 2.5 times the 5-day average. Something is cooking on that one. Moves coming into uh, India Cement, a bit of profit booking, 3.5% lower from record highs. And of course, there is Shipping Corporation. Let's get Kunal's view on Shipping Corporation. 234. This is 2.6% higher. This breakout is on heavy volumes. 20 lakh shares have been traded, Kunal, and this is about 50% its 5-day average. What's cooking on Shipping Corporation?
Well, if we talk about stock, Shipping Corporation of India right now trading at 234, and recently stock has taken the support of its previous bottom, which was placed at 225. Not only this, at strong support, it also formed hammer candlesticks formation. So technical perspective looks very attractive for this counter. One can get into the stock at present level. Right now, stock is trading at 234. We will keep asset at 225, and if you talk about target wise, the way stock has been trading on its daily chart, first target would be at 241, and if stock sustain above this level, then further upside would be there up to the level of 252. So yes, stock looks very attractive on daily chart. One can get into the stock with strict stop loss of 225.
Okay, that's on Shipping Corporation. Then this morning, um, Nifty is still steady and 26,044. It's looking actually decent. It's on the green now and holding fort at this point of time. From the banks and financials, Kunal, anything that's catching your eye, especially as we count down to the RBI meet?
Well, no doubt we have been witnessing some, good upside momentum in the financial counters like, Sriram Finance, SBI Life, Muthoot Finance, and all. Even Kotak Bank is performing very well in today's trading session, right now at 2151 level. If you talk about the PSU counter, then from my side, please avoid this PSU counter at present level, because we have been witnessing some bearish reversal formation on its top level, and from the top level we have witnessed some decent profit booking in these all counters. So please avoid these counters. But yeah, one should focus on SBI Life, because daily chart looks very attractive at present level, and the way stock has been trading on its daily chart, further upside would be there up to the level of 2080, and if stock break this level, then further upside would be there up to the level of 2150. One can keep asset at 1988. So from this financial, I think SBI Life looks very attractive. Not only this, one more stock is there which looks very attractive at present level. It's a Muthoot Finance, right now trading at 3,731. Daily chart looks very attractive at present level, and if you talk about overall scenario, then further upside would be there up to the level of 3,950 to 4,100. Right now stock is trading at 3,730. One can keep SL at 3,650, and decent upside momentum would be there in this counter.
22 minutes left for the all crucial RBI policy meet to be announced. For the moment, again, the rally has revisited auto stocks. Look at Hero Motors, look at Maruti, M&M, and of course, a stock that Kunal has just marked, which is Muthoot Finance. These are stocks that are doing extremely well uh, on the long side, but flat as flat can be. 1032 shares in the green, 1500 in the red. So the bears have a bit of edge on the market. Everything may change for the better or for the worse, depending upon what the RBI governor says. But Kotak Bank in top shape, M&M doing extremely well, 0.5% higher, and of course there is absolutely no stopping Hero Motors. Aabha, as I mentioned, Hero is the hero.
Totally. I'm curious about some of the auto ancillary or tire names as well. Kunal, any of those that are looking good to you?
Well, definitely means Apollo tire looks very attractive. Not only the Apollo tires, if you talk about overall auto pack, then Maruti looks very attractive right now, trading at 16,100. Chart looks very attractive at present level, and it has been trading above its 50 days moving average. Not only its 50 days, but it has been trading in its higher top, higher bottom formation as well. So it looks very attractive at present level. One can get into the stock at present level with strict stop loss at somewhere around 1500, 15,000, 15,850. If you talk about target wise, first target comes at 16,250 and stock break this level. Then further upside would be there up to the level 16,700. And but obviously we may see some kind of positive sentiment because Maruti Suzuki has recently launched its e-Vitara. So booking is going to start soon. So advanced booking will create some positive sentiment in this stock. Now if we talk about Apollo Tires, the way stock is trading right now, and it's in its daily chart, stock has taken a strong support of its previous top, which was placed at 510 level. Right now successfully trading above this level. Not only this stock has been trading above its 50 days moving average as well, and moreover it has been trading in its higher to higher bottom formations. So overall technical structure look very attractive at present level. One can get into the stock at present level with strict stop loss of 510. If you talk about target wise, the way stock has been trading on its daily chart, first target would be at somewhere around 542, and if stock break this level, then further upside would be there up to the level of 565. So Maruti and Apollo Tire from this auto pack looks very attractive with present level.
9:40, ladies and gentlemen, a complete suspended animation in the market. Bit of selling pressure you can see on stocks like Angel One, 0.5% lower, HFCL slipping 3.4% lower, Mazgaon 1.1% down, Voltas a percent lower. These are FNO stocks that are slipping in trade, but in terms of gainers, let me again revisit a few names in the FNO space that are doing pretty well. Shriram Finance 1.6% higher, Policy Bazaar 1.8% higher, Marico 1.5% higher, and Indian Bank 1.2% higher. These are the top 4 gainers in the FNO space for today. Prestige Real Estate, SBI Life, something that Kunal has just marked, and of course RBL Bank, Eternal, and Infosys showing bit gains. Infosys back above 1600 after a very long time. Very successful buyback, putting in 4,500 crores worth cash back in the hands of former shareholders of Infosys. That's the status for the moment. Bajaj Finance strong, 1% higher, 1038. Aabha.
We've got a few more stocks from the broader market. Shriram Pistons is up about 3%. There's an acquisition news there. Delta Corp up 4%. Promoters looking to buy further stake in the company. So there's a Shriram for you. And we'll pull up a Delta Corp as well. And that's at 70, up about 3% right now. So some of these names, we were also talking about couple of the capital market plays that were buzzing in early morning trade. Lloyd's Engineering, giving you a bunch of these newsmakers, Kunal, to see any of them are showing up for you. Walcott has been steadily up. There was some, of course, news last week, but it continues to trend higher, up another 5% today.
Yes, definitely. High volatility is there. Not only this, since last 1 week, we have been witnessing some, extraordinary volatility. Not in terms of volume, but also in terms of price activity. Right now, stock is trading at 1386, trading about its 50 days moving average 1368. If stock gives it close above this 50 days MA, then good bounce back will be there up to the level of 1560, and if stock sustain above this level, then further upside would be there up to the level 1662. So yes, this stock looks very attractive if stock gives closing above its 50 days moving average. But from my side, one should avoid this stock. Please avoid this stock because high volatility is there, and I'm not getting any particular momentum because risk reward is not that much of favorable to create any long position. So yes, if you have the stock in your position, then hold it as of now. No need to create any fresh position at present level.
The half an hour has lapsed, ladies and gentlemen. Nifty has held 26,000, in fact 26,046. What's helping the Nifty higher? Let's just take a look at the pullers and draggers. That will show you where strength is coming in. Infosys contributing 10 points, Kotak adding 6 points, Bajaj Finance contributing 4.8 points, ICICI Bank, Eternal, and M&M contributing between 3 and 4 points to Nifty's very modest total of an uptick of 14 points. What's slipping? The big ones, RIL, HDFC Bank, bit of profit booking on both. Bharti Airtel, Indigo, Tata Steel and Sun Pharma are the among top 5 losers. Abha, time to wrap it up?
Yes, I just want to just take a look at the defense stocks, just touch upon them on the back of course, President Putin's visit. Let's just take a quick look, see where they're at. Right now, no major action. Let's see what happens during the day today. Thanks so much for joining us, Kunal, and we'll of course be back with more market action in a short while.